Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Hey, thank you, Jeremy. Thanks for our listeners jumping on the call. Yeah, if we looked at the major indices like the S&P 500, the Nasdaq, the Russell 2000, that small cap index, they all hit new highs. They gained anywhere from about 1.9% to about 2.5%. That was led by technologies, utilities, consumer staples. Those two latter ones, led by technology, those two latter ones pulled back a bit. They were the decliners. If we looked at inflation and the Fed outlook, we saw the September CPI. Now that's Consumer Price Index. That's what you pay for consumer goods, for goods and services. That rose about 0.3 or 0.3% month over month, and the annual rate was about 3%, both slightly below some expectations. Now, investors were expecting the Fed to remain pretty dovish, focusing on labor markets and softness as they come into their meeting this week. Now, we had interest rates and yields. We saw the 10-year Treasury yield close below 4% for the first time since March, and we saw yields ending the week modestly lower. If we look on the commodity front with oil, we looked at the crude oil futures. They surged about 7% after the U.S. added some sanctions on our Russian top producers. We saw India and China both cut Russian imports, raising some global supply concerns. Gold futures fell again, down about 3.5%, stabilizing after some pretty sharp drops that we saw earlier in the week. Economic data, we saw the S&P global PMI rose to about 54.8 from about 53.9, driven by some services. We saw consumer sentiment fall to about 53.6. That was the lowest since August of 22. 1 year inflation expectations, that dipped to about 4.6, but the long-term rose to about 3.9. So all in all, we're just seeing a moderation here, but still some solid numbers. We look at housing, existing home sales up about 1.5% month over month in September. Now that's the median home price is now at $415,200. That's the 27th straight monthly gain on an annual gain. If we look at global highlights, we look at Japan and Europe and over in China. If we focus on Japan, stocks hit some record highs. The yen was weak. And the core CPI rose to about 2.9%, but rate hike outlook remained pretty uncertain. Over in Europe, we saw Germany's private sector strength lifted by some Eurozone PMI. That was the highest since May of 2023. And over with the Bank of England, their rate cuts were pretty unlikely since we saw CPI steady at about 3.8%, so higher than ours year over year. That was prompted by some retail sales being up for the fourth month. Over in China, Q3 GDP growth was at about 4.8%, driven by some industrial production exports. So we're still seeing some reasonably strong inflation and growth overseas. Now, if we go into this week, so the week ahead, we're looking at the Federal Reserve and the U.S. economy. That's going to be in focus because we've got the Fed meeting on Wednesday, and they're likely to cut. Now, it's going to be on some limited data, at least reported out to us, because with the government shutdown, we could get a pause on the Q3 GDP estimates and September core PCE price indicator. But all in all, the Fed is indicated to lower rates again, acknowledging that we're seeing some softening data, but we're not falling off the cliff. They're not doing it because they feel like we're looking at a recession. So I do want our listeners to realize that they're lowering because things are softening, not for a recession. Fed does face some pretty mixed pictures. So we got strong GDP, gross domestic product, so the growth of the U.S. economy, but at the same time, stock performance versus soft labor markets, right? How do you weigh all that out? Stocks are looking good, but the labor market's coming down. So you want to be careful about lowering too much in a strong environment. And that's reasonably where we're at, even though it's weakening a little bit. And as I mentioned before, we're in the middle of earnings. So we got some big tech week this week. Wednesday, Thursday, we got Meta, Microsoft, Alphabet, Apple, and Amazon coming out on Thursday. And nearly 45% of all the Nasdaq 100 is going to be retorting in terms of their value of the indices, and 25% of the S&P. So it's a huge week for technology, huge week for the big AI players. And we want to see what's going on with earnings. Do we still have support in those earnings? Do we still see growth in those earnings? Do we still see spending over there? Globally, we'll see the Bank of Canada expected to cut rates about 25 basis points, and the ECB and the Bank of Japan likely to hold rates pretty steady. Then we'll be looking at some inflation updates over in Australia in the Eurozone. Jeremy?
Gotcha, Graham. I had a question for you. You're talking about earnings. We're about a month into this quarter's earnings. How do things shaking out right now, do you think?
Yeah, earnings are looking pretty good. And like I said, the market can support moving higher, steps higher, some higher multiples as long as earnings are in place. So I think earnings are coming out. Earnings growth is about 15%. I think expectations were about 10 to 12, so definitely above that. And we're seeing revenue growth of about 8. And again, we got some really big tech heavy hitters, trillion-dollar companies, $4 trillion companies reporting mid to late this week.
Gotcha. Well, Graham, thanks. You always appreciate the information and expertise, and thank you to our listeners that check in with us every single week. And I did want to mention we do have our quarterly webinar tomorrow that you should have seen an email go out tomorrow at 12 o'clock. Graham Wickham and Jennifer Smalley will be kind of going over some market updates and some end of the year tax planning tips. So check in with us tomorrow, and we look forward to seeing you next week.
Take care.